every morning at 8:45 Eastern. Option Omega's got your back. Troy's dreaming big like LeBron. Mass backtesting like a daddy Mac. Dan's 30 years got our way. Trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone.
Good morning, Dan. How are you?
Good morning, Matt. Doing fine. How's everything in beautiful Indianapolis?
It is it was 24 temperature when I woke up this morning. I did not ask what the wind chill was. It was cold. I did not ask any of the computers, any of the machines to tell me the wind chill. I did not look on any of the machines to find the wind chill. It was cold. I got one of those. I got this neck wrap though. I don't know what it's called. I don't have it right next to me. It is amazing. We're going to Canada in a few weeks and starting to prep, and got this neck wrap for Canada, but I've just been wearing it around the house, and it's fantastic, Dan. It's dare I say, life-changing. So good here. How are you doing this fine Tuesday morning?
Doing good. Hey, when you go to Canada, are you going to catch a hockey game with the kids, or?
We're going to catch a basketball game, not a hockey game.
Wow. In Toronto.
Well, so here's the lucky thing. I asked my
youngest. You got another $6 ticket for.
No, even better. I asked my youngest, I'm like, what do you want to do? He's like, well, I want to go see he's 10. I want to go see the Pacers play in Toronto. And I'm like,
oh, the Pacers.
Son, wow. The Pacers, we're there 2 nights. The odds that the Pacers are going to be there the same night we are going to be there are low. I mean, I think they play there once or twice during the year. This is not going to
right.
I pull up the schedule.
No, they're there.
Second night, we're there. So not only that, I have a huge credit from one of the ticket companies to use. So we're going to the Pacer game, Dan. We're going to the Pacer game at Scotiabank. Anybody from Toronto? I know we have a couple folks. Hit me with your best Toronto suggestions. I'm gonna sound very nationalist when I say this, so I'm just gonna say it. We're gonna spend some time in Buffalo. There seems like there's more exciting stuff in Buffalo and Niagara Falls than there's Toronto. So if you've got any must-haves, guys, hit me with the must-haves. I've got a couple on the list, but I don't know. It's our first time.
Man, I've been to Toronto for doing a seminar one time.
Okay.
It's something normal. I mean, it's not far from
it's not far from the border.
Yeah. Number 2, it's a small, it's a city similar to other cities in the it's very nice. I mean, you have your coffee spots instead of Starbucks. Panera, Tim Horton, ex, I think, hockey player.
So he was a hockey player? I did not know that.
I'm not positive, but someone confirmed that, but I think so. But yeah, it's a nice city. And I think you'll find, just like Indianapolis, I think in some ways it will mirror, I don't know which ways.
Yeah.
Other than the weather's probably similar right now. Cold.
Well, the thing I'm most interested in is they have this like underground city called The Path with like supposedly like hundreds of shops. It's like integrated into the subway. I really need to do a little more research on this, but I have a couple weeks. But they have this underground city to where you can walk around underground and like do all this stuff underground, and you don't have to go outside in the winter. So I'm prepared. I'll just say I've been to Costco twice in the last 48 hours, not intentionally.
Yeah.
And I'm a big believer in Costco's winter weather gear, the long johns, the heated stuff, the gloves. I have a lot of that stuff. I'm getting it all
Right.
out. I'm charging my glove batteries right now, heated gloves. What a world, Dan. What a world are we living in? And how is it in your neck of the woods today?
It's good, but you made me think, when I got to get this in. I don't know if Tom's listening, but when I was in the pits in Chicago at the
Yes.
COE, you'd only have to walk maybe from Union Station. So you take the train in the Union Station if you lived in the suburbs, and then you'd walk 4 blocks, either to the Chicago Board of Trade, Chicago Mercantile was closer, or the Chicago Board Options Exchange where I was. And 4 blocks, you seem like no big deal, 4.5 blocks. But when you're getting the wind off the lake, it was like, you ever see that in weather conditions? It'll say, it's 40 degrees, but it feels like 2.
Yes.
And so, but what's nice in Chicago is most of the time I would forget to wear the right clothes because you didn't need to, because, okay, you're on the train, which is heated.
Yep.
Then you come off. So the strategy was, and somebody wrote a book on this, the strategy was, how do you go 4 or 5 blocks in being outside very little? In other words, because you have these big buildings in Chicago.
Sure. Can you
knock
just
off
cut
a
through all
block.
the buildings?
Oh, yeah. So you knew the buildings, and they were hit. And the buildings would say, we'll let the walkers come in because we'll have coffee shops and stuff if they want to step. But you could literally, I could wear I'm not saying I did, but you could wear a pair of shorts in the winter, go 5 blocks, and only be outside maybe 40 seconds if you knew your buildings correctly. Because these buildings were like a block long.
Yeah.
And they had nice heat. So that was a strategy, because many would not dress accordingly.
Right.
So everybody, these swarms of people would be going in. You say, why are they going into the buildings? Shortcuts. If I can find that book, I will. But there's a book called Navigating Through Chicago Through Buildings.
This is like options trading. It works. If there was a black swan, you would have some problems if a building was closed. For some, they would never close this building. But if they did close that building, you could find yourself outside a little bit. So you just have to rely. You have to rely on the robustness of the interconnectedness, huh? I think there's some other. I think Minneapolis kind of has this too, right? Where there's just like a high level of crosswalks.
Yeah.
Our chat says that second floor connections. Yes, that's what I'm thinking of with some of these cities. So yeah, it's we still have a lot of green leaves on the trees here, lots of them. And they're covered in snow right now. So it's early for snow, but listen, a little volatility, Dan, it's a great transition, a little volatility in the weather. Yeah. Let's talk about what happened in the market yesterday, because, yesterday was a big move. It was a big move in the SPX. And I just kept the same picture yesterday, because yesterday we had gapped up like 60 points and, are the Bears going to recover? And yesterday they did not recover, Dan. The Bears did not recover yesterday.
No. And when you think about this, last week we're talking about, the SPX was down, whatever, 3.5%, 4%. And we're thinking, up until Friday, through Friday morning, we're thinking, okay, does this turn into a 10% correction, whatever?
Yes.
And here we are. And that's the discussion.
Yes.
Friday morning. The discussion Friday morning on the OO show would be, okay, we're going to open down. Does this 4.5% correction turn into something? Today, we're talking about what 4%? We've come back the whole thing, right? Basically, when was it Wednesday evening last week or whatever? I mean, from when we went down 4%, we've come back from Friday morning lows till yesterday's highs. What was that, about a bucket, 180 points or 3?
Pull up a day chart. Yeah, I mean, we moved yesterday. It was a 103-point move.
Yeah, 103.
So I mean, and if you pull up the chart just for the year, we're, I mean, I think the high was it was over 6,900, right? But we're going to open about 100 points away from that today.
And we're up 6 again. We come into this Tuesday morning.
Crazy.
SPX up 16.4% a year, preceded by 2 years of up 20%.
Yes.
I mean, the only good thing, again, just looking at trades or range bound trades, as you say, Matt and Troy and Rusty, on the sticky volatility, that the vol is still, we're getting a little more VIX or premium than we would expect when we're at these high levels in the market. We're not at 12, 13, 14. We're more at the new, I don't know if it's the new norm, but 17 or 18. And I think the whole reason is we're getting bigger candles. The last few weeks, you're just, not that we're net going a lot of places, but you're getting more ranges. And I think that's good. But I think what's tough for a trader is, if you ever hear traders, and I wonder if you hear a lot in the Discord, is like, for the good old days.
Yes.
2002.
Yes.
I wish we could. And instead
all the time. I'm one of those people, Dan.
Oh yeah,
I self-identify.
I get it. I self-identify. But instead of focusing on, what's in front of us? What's going on in the last 4, 5, 6 days? What's going on now? And trying to navigate through the market now and what's in front of us now, our mind goes back to even some of our trading style. We're still trading as if this is the way I've done it, right? Yeah. This is the way, and I don't know, I'm not pointing, but I just, I talked to sometimes with I'll talk about engineers.
Yes.
And I love engineers. I mean, the options, there would be no options market without engineers. They're the people trading more than any other career mode thing.
Yes.
But the thing with engineers is, they want, a lot of, I'm not going to say trading by the seat of your pants, right? But a lot of trading, it's not an exact thing, right? We're not concerned when we trade. I need to know the exact Black-Scholes model, blah, blah, blah.
Engineers are. Some people are.
Yeah, but I mean, even in terms of exact, they want to know, I will trade this butterfly or I will trade this spread the rest of my life. I said, wait a second, what's going on right here? What's going on? Are you a little bit of flexibility? And I think, I love engineers and I think they're very good, but it's not that exact. Would you agree? I mean, I don't, people.
This is actually super interesting because this is actually exactly what we're going to talk about with the back test today, and the level of exactness and preciseness, and kind of have a discussion of where's the line. So I'm excited. I mean,
one thing, Matt, if on that thing, if I could just throw it up, I remember when I was in the trading pit, I remember the specific, because people would always ask, well, what model should I use? Should I use Bjorklund or Bugabaki or, whatever model?
The Barbara Streisand model. That's what I said. Yes.
I would use that one. But, I remember being in the trading pits, there'd be 3 guys next to me trading pretty good size, and they all had different models. And you say, well, who was right? Who was right? It doesn't matter. And I tell people, look, if you're using to me, does it make sense to use a brokerage model maybe somewhere near where your brokerage firm is? Right?
Yeah, right.
That might be
probably.
Yeah, instead of saying, okay, I've done some research and I've come up with the Chicago Bears model.
Right.
Well, if no one else is using it but you, it could be a problem. So if you're using these models, the key is be consistent. Don't be switching when you get ticked off and you blame your
model. Your model's not. Pick a model and
just stay with the model. And that's what in the pit, it all seemed to work fine. If I use this model, someone else maybe for early exercise of the puts use this model. Just be consistent and stay.
So this is super interesting because you're talking about consistency and modeling, but I'll just talk about something that I have experienced this year that I haven't experienced before in a good way. And that is consistency and outcome. And what I mean by that is I've been trading backtested trades now for most of 22, 23, 24, most of 25 for 4
Yeah.
years. And friend of OO, Mark Anderson, actually talks about that depending on how you trade and how you backtest, that you end up chasing your backtests a lot because you're constantly tweaking them. And again, this is going to be exactly what we're going to talk about on today's backtest here. But here's the point. You can end up chasing your backtests if you're constantly tweaking them. You're constantly, because backtests are by definition, I mean, any sort of filter is a curve fit. It just is. And you filter out these huge losses that you experience in real life. You're constantly chasing your performance. This year, what changed for me, and I've had 4 very good years of trading, significant beat the SPX significantly every year, smaller drawdowns, bigger gains, all that. But my back tests still looked like incredible. And my live trades were not as good as the back tests. And that changed for me this year. And what changed was automation. Like I don't, and the other thing is this, I've been working on the craft of backtesting in my 4th year now. And so I make changes to the backtest, but they are much more minimal than they used to be. So the combination of knowing these trades inside and out, which I feel like I do, I know how they win. I've seen them lose. I'm not going to say I know how they lose every time. And I'm still learning about some of the winners. Like April was a new thing. Like to see them win at that level was crazy. But the combination of automating all the trades, being essentially 99% plus automated and so little discretionary, and then not fidgeting the back tests, I'm sticking with the model is what I'm saying. And so what's interesting is like my portfolio actually this year isn't in the back test, isn't having quite as good of a year as it's had the past couple of years. Great, still doing very well, but my performance is better than it's been the past couple of years because I'm executing it. I'm not switching the model is what you're saying. I'm not searching around. I'm not making a bunch of tweaks. I'm not making a bunch of changes. And with that, let's go to the back test that we talked about yesterday.
Man, I'm going to come back after we do the back test.
No, please talk now.
Right.
I will do a couple live things and
let me just echo that.
Show a few iterations.
I'm going to echo that coming from a different neighborhood, right?
Okay.
But I'm going to echo that and say, for 20 years or whatever amount of years, since I've left the trading pits, been teaching folk, retail trade, different range bound type trades. Now, again, we didn't have weeklies the whole time, so couldn't do as much short term.
Right.
But the whole thing was, I've never, in the years that I've been teaching, most of this stuff it's always had high win rate, right? When you're doing, depending on how you trade. And you give a plan for trading, but over the years, and then I've talked to people and said, okay, for people maybe who have taken a hit or something, I said, let me ask you a question. Did you follow the plan? Could you have got out when you were supposed to? Could you have, the rails or whatever?
Right.
People always, I could have. It was, in other words, the same problem in just the world of discretionary before automation that I ran into is people keeping up with a plan, right? People keeping up. And students, here's the biggest thing. Before automation, a good automation, I mean, with rails and everything.
Yeah.
What people would do is, okay, they take a hit, right? It's their 5th trade they do, 5th calendar they ever do in their life. They just do something wrong. They leave it alone when they should be adjusting. And so what happens is you talk about tweaking it after. Okay, I'll never trade a calendar again. I'm going to take a vow between my wife and my kids. I will never trade, and they make this extreme instead of saying, well, it's a correctable problem. Stay out of the way. You didn't adjust anywhere near where you should because you thought the market was, whatever. Stick with the plan. So the great thing with automation is it does it for you. My struggle has been, like you said, you've been doing it 4 years, and you've been.
I've been in the trench. I've been in the pits with it. I've been in the trenches with it, Dan.
Yeah, I've been doing automation with your guys' help since it started. When did automation start, Matt?
We launched, I mean, the platform's been in some form of use now for over, a couple months, over a year. We launched the beta basically beginning of this calendar year, and then like the public launch, maybe I think April or May.
Yeah. I think that's when I came in, April
Yeah.
or May.
Not even 6 months yet.
Yeah. So 6 months. And I'm convinced, be honest, from someone teaching risk management for a long time, this is the answer for a lot of people, because it does. It's not it's the back testing with the rails.
Yeah.
And the automation. But my struggle, and it's a struggle that I do see light at the end of the tunnel sometimes, where, because I'm used to doing discretionary for 20 years, to give up on that, because I always see with the back testing is still doing much better, right? Because I'll get my opinion in there, or I'll do it's the human frailness.
Yeah.
And I think that's what I really, and really the automation's got most of the mental decisions anyways. I mean, like a double calendar, do the same thing, right?
Yeah.
If it's too close to the short strike early on in the trade, or if it goes past the short strike, or if you're doing, a lower delta like 2024, you have the middle sag, and then you go to a calendar, butterfly has these things. You've got it all basically in there, but you just have to, it is a trust factor. And to me, the way you can trust it is keep your size under control, right?
That's right. Keep it. Yeah. I said this a couple weeks ago, I've been thinking about this. A simple heuristic. If you can't, this is what I'm using for myself. If I can't trust the back test and go about my business and not think about what's going on the platform, then I'm size too big. If I can go about my business, and check in on the platform, whatever. But if I can go about my business and not be obsessed thinking about, is this trade going to win or lose? That tells me if the sizing is appropriate or not, as far as how sized am I on any one trade. And that's been just a helpful thing for me to bounce around in my head. So
yeah. And one last, and when you think about it, you go through, you take the time and energy to come up with a good plan, right? And it is some work, right?
Yes.
This is
it's a lot of work.
It takes some work. I mean, I'm not the most tool oriented. That's probably an understatement. Even though, I mean, it's easier for me to catch on with the modeling tool, but it's very robust if you stick with it. But what's great is you have a good back test that you've come up with, and you've done it in a time of peace. And then when a time of war comes,
that's right,
is going on, you just have to believe it. I mean, you've done all the work, you've got the tests, sit back, because that's what is, I mean, that destroys retail traders' emotions. But and most traders don't need like a psychiatrist, they say, oh, there's books on trading psychology. I'm not saying there's no place for that. There were a lot of misfits in the pits, but most of them didn't go to a psychiatrist or for trading purposes, because they were taught risk management. And if they didn't do risk management, they'd be fired. I mean, I think that's one of the biggest problems, not being on a rant here, but the problem with retail traders is, which this stuff didn't happen in the pits, right? If in the pits, when we talked about our trading plan in the morning, 6 guys heard me say, this is when I'm getting out of this trade. This is what I'm doing. If I did it more than 1 or 2, you're out, right?
Yeah.
The problem is no one can fire, right? The retail traders in your community or any community, no one can really fire them, right? They have disposal. I mean, in a sense, it's
they can fire themselves, basically.
They can fire themselves, but there's no accountability. Whereas in the pit, it wasn't even a thought to me to, hey, you said you're going to get out at this point, even though there's going to be a loss.
Yes.
Said you'd get out. If I come back and tell them I didn't get out, they can't trust me anymore. So you're done, right? Anyways, I didn't Matt, we got a back test today.
This is good stuff. This is all related to what we're talking about. It actually is. And we're looking at the same back test we looked at yesterday. And here's what I want to talk about is trusting the model and crafting the model. Yeah. And it's a super simple example, but I think it's super important because a lot of my day is spent interacting with users of Option Omega. Like this is my job. And so I've had at this point, tens of thousands of interactions and seeing how people use the back test. Think about the back test. Now think about automating strategies. And I want to talk about the fidgeting and the test creation, and really the test creation, because what we have yesterday is this back test right here. And then I have three different versions actually. This version that we're looking at is the one that we showed, and it's got an RSI between 40 and 70. So there's different levels that people would say were overbought or oversold, but 40 and 70 are kind of like standard levels that a lot of people would agree on. You know, you'll find different ranges. And so the idea with this back test is what? It's just to review everybody. This is called the McRib, the RIB, reverse iron butterfly, buying the guts, selling the wings. So this is a play that's essentially a long movement play, a long volatility play, as it was a 0-day play, fixed risk debit trade. Yeah. And it's entering three things it looks for on enter. Did the VIX move down overnight? Is the VIX moving down intraday? And the third thing, putting the finger in the air, which way is the wind blowing? What's our weather check? That's what we're going to talk about today for these last couple minutes. What's our weather check? So this is an RSI between 40 and 70. Again, this is not rocket science. It's just RSI. Here is the back test right here with an RSI between 30 and 70. Okay. So if we look at the 40, we've got a capture rate of 17.4%, a MAR of 6.4, wins 61% of the time. Look at this. It wins. So this is, and the other thing is it's got about 20 trades here. Okay. The win rate is almost identical, but the capture rate, it's about 10% different. So here's something you can do with the back test. And this is super helpful. And this, in my mind, is where good backtesting work can be done. Is you want to explore what an optimal range is to run a test. Just run a back test of just those ranges. So what I have here is the back test between 30 and 40. And what you'll see is it wins about 60% of the time still. Much smaller number of trades, wins about 60% of the time. But what do we notice? The capture rate is 3.3%. And why is that? Well, when we look at these, you'll see that when our RSI is that low between 30 and 40, what you have is you have expensive trades. So this one back in April is kind of a big example. And we haven't been in this range very much in 3 years, 30 times, or in 4 years, 30 times. But you'll see what can happen is you end up paying a lot for your juice. So you want to squeeze the juice. You want this thing to move. At $43 on a $50 trade, it better move. And in this case, it did. But your risk reward is just so different. And so I like not putting this thing on when the RSI is below 40. Because the difference here between the 30 and the 40 is enough. And you can see why between these back tests here, you're winning about the same. It's a small sample size. You're winning about the same, but you're just not getting very much juice when you squeeze it.
And when you say that, if the RSI is below 40, the VIX
dumpy. I would just say dumpy market.
Dumpy market, VIX is up.
VIX
So-
is,
So
yes.
you have for this type of trade, I don't mean to be like the commercial with the Italian guy speaking out of, hey, how you doing? No, how you doing? Both sides of the mile. But you have two things going on here. If the market's going down, you're having bigger candles, vols going up. So you say if you have an RSI below 40, hey, you're getting the big move candles.
Yes.
Right? So, hey, even if you're paying more, you're getting movement.
Yes.
Okay, that's the good. The bad is if it's going down, now my risk on a trade like this is what if things slow and the vol starts coming down? We're probably, I'm just guessing here, if RSI is below 40, VIX might be 18 or higher. Well, now if we have a slow day, as Mr. T would say, there's pain.
There's
right?
pain.
So you
There's
have
pain.
that, it's one of those things. It's like, do you like long Vega trades when vol's high? If it stays sticky like 22, you bet your britches.
Yeah.
But I don't like vol. You always have that in the back of your mind, reversion to mean. If we're at 20 VIX and now is the time we drop 3-4 points in volatility, I might not be so happy with my mixed month. But anyways, good.
Exactly. Yeah. And here, let me just show that one more version of this back test to further illustrate the point home. If you go 45,
Now you go the other way. 45.
go the other way and make it more restrictive. You take, here's our original 47. You take about 20 trades out. Your capture rate goes down. Your MAR goes down. That 40 is a big round number. But whoever did this back test did some good back testing work. And this is what I like to see, a big round number that you can easily explain. Why did I pick this number? Well, between 30 to 40, it's dumpy. And from 40 to 45, 40 to 45 is actually where you have a pretty good risk reward, where your capture rate, when you take that range out, your capture rate goes down quite a bit. So this is the power of back testing. And yet at the same time, we're not picking 38 3/4 here.
Right.
We're not picking 42.42, the secret to the universe. We're just trying to get a reasonable, because backtesting is forward looking. You could have the biggest winner you've ever had at a 39 RSI and the biggest winner you've ever had at a 71 RSI, and the backtest wouldn't pick it up. That's okay. This is the thought process behind how do we want to test what is overfitting versus fitting. Now, there are people who argue, Matt, I want to get the most optimum back test. Eek, 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 eek. I'm not making fun of those people. That's literally, they're going to test every single RSI, 1 point increments, going up, going down. That may give you the most optimum back test. It may not be the most robust back test if you back test like that. That's my point. It may not be. Just simply doing that is maybe not going to give you the most robust back test. So could this back test be refined? I'm sure it could be refined even more. I'm sure there's probably even a few other things we could do to it, but I just wanted to highlight kind of thinking through how the RSI filters kind of work and why it makes sense. That range of 40 to 70 makes sense, and it doesn't feel super overly fitted to me. So yeah. That's kind of my thoughts on that.
Yeah, and what's good about it, Matt, is that, again, if somebody without the back testing would have come in and said, this is what, RSI, this is how I'm going to use RSI, without testing it, I mean, the probability they probably would have been wrong. Right. And that's the nice thing with the back testing.
Yeah.
Hey, you know what? If you think based on your experience or your technical analysis that this is the right numbers, well, then put it to the test. And I think, like you said, as long as you don't curve fit, 40 to 70, I would not have thought that might have been ideal. Right.
Right.
But now that I see it, I feel comfortable could leave it there. Right.
And you can understand why when you look at the 30 to 40 range.
Absolutely.
You can say, oh, well, this makes the back test puts words in your mouth in a good way. It gives you the explanation. Like it helps you refine your thesis of 40 to 70. I think I'm going to get a fair price for this risk. And yeah, the back test has borne that out over these last 200 plus trades. Now, I don't know what's going to happen in the future. Nobody does, but it makes sense why it was put together this way.
Yeah, and it makes sense because it is risky. You know, when you think about it, when RSI is below 40 or 30 and you're paying through the nose for this McRib, but you'd also be paying up quite a bit for a reverse iron condor.
Yes.
There's risk there, right?
Yes.
Yes, there's movement going, but it's like musical chairs. If the music stops, you're going to suddenly, wow, did I get nailed? I wonder why I got nailed.
Yeah.
And it's like, hey, danger, Will Robinson. We're getting to this upper end. You know, maybe you shouldn't play at that area. And that's the wonderful thing about an unemotional backtest.
That's right. Well, guys, thank you so much, everybody. Tomorrow, there's no show on Wednesday, but we will have a show Thursday and Friday. So no show tomorrow. We'll be back Thursday. We'll be back Friday. We might do a different back test on Thursday and Friday. If you have something you want us to chop up, you have my permission to DM me on the Discord, post it in the OO show discussion and tag me, whatever, and we'll chop it up. So everybody stay safe. Happy Tuesday. Final market check. We've pumped a little bit. Let's see. VIX is up a little bit, about 15 cents from close last night, and futures are down about a dozen, a baker's dozen.